Hello traders, welcome to the third module of the Advanced Technical Analysis course, Chart Patterns. In this lesson we're going to teach you how to trade double tops and double bottoms, which are very strong reversal signals, so we are going to be counter trend trading here. So let's start with the entries, the stop losses and the targets on the double tops and double bottoms, and this is how we trade these reversal patterns. Whether you are trading a double top or a double bottom, you should always wait for the breakout of the neckline. And the neckline is the low formed after the pullback from resistance on a double top, or the high formed after the pullback from support on a double bottom. And here's an example of a double top neckline breakout. As you can see, we are in an up move, and we hit this resistance area and we pull back. Then after the pullback, we hit the resistance area again, and the resistance zone held because of the bearish pressure that we found at these levels. And when the neckline breaks, the neckline, remember, that is the low formed from the pullback of resistance, we have an entry to go short on this reversal pattern signal. And of course, if we are trading a double bottom at support, you should wait for the pullback and for price to make a new high, and then a pullback, a retest of support, and when price breaks with the high or the neckline of the double bottom, you have a long entry. Now the stop losses on these patterns are very easy to place. When we have a breakout and an entry, the stop loss should go above the double top on a bearish signal, and on a bullish signal or a double bottom, the stop loss should go below support. And this is easy to understand. As you can see here, we have a double top in play and a neckline breakout. When we have the neckline breakout, we have a signal to go short, and our stop loss levels should be above the double top or above the resistance level that was rejected. Why? Because if we enter here and price fails to go lower and breaks with this double top or these double highs or these flat highs, our short trade idea is invalid because we will be making new highs, okay, new higher highs. And of course, if you put your stop loss level just a few pips above your entry or above the neckline breakout, this stop loss is not wide enough because price might come back and retest this breakout zone before continuing lower. So if you put a not wide enough stop loss level, you might get stopped out on a good trade idea and on a trade that would have yield a profit. So you have to give your trade some room to breathe, and here the stop loss level should go above resistance, and of course on a double bottom they should go below support. Now for the targets, the calculation of the targets are fairly straightforward. When calculating a double top or a double bottom's target, you should measure from the resistance or support in a double bottom, of course, level to the neckline. When you have the measurement in pips, you should extrapolate it to the breakout zone. Now here's an example. Well, it is the same example. As you can see here, we made this high, we pulled back, and we retested the same area of resistance that was rejected. This gives us a double top, and we measure from this high to this low. This is the neckline. We draw a horizontal line at the neckline, and at the point of the breakout we extrapolate the same measurement to have our targets. So as you can see, this gives us a pretty nice risk to reward ratio on a high probability setup. And remember that when trading these breakouts, we are just trying to profit from the momentum of the move. And when these breakouts happen, price tends to move faster in one direction, so you have to be fast also to enter your trades. And to exit them with your calculated targets. And remember that once you plan your trade and you enter the trade, you should stick to your plan and trade your plan. Now let's have a trade analysis on a double top. Okay, as you can see here, we are in a steep uptrend, and we just made a new high and tested this area of resistance. And this candlestick, which is a doji candlestick, gives us a signal that this area might be rejected. So we wait, and as you can see, this area was rejected. But then we made this low right here, and after seeing this pin bar, we can assume that price is going to retest this area and maybe break with this high. So we need to wait. And as you can see here, price tested this area again nicely, and we have another doji candlestick formed at resistance. So we might think that this area of resistance was rejected twice, which would give us a double top for us to go short on the asset. And some people might be too aggressive, or well, some traders might be too aggressive and just short here at this level. Okay, but if you want a really high probability setup, you need to wait for the neckline to break. Now you can see here that we have a double top. We tested this area of resistance twice, and we have the neckline at this low right here. So the first thing we're going to do is we're going to calculate our targets, right? And our targets are calculated from this high to this low, or from the resistance area to the neckline. Remember that in a double bottom, you calculate your targets from the support area to the neckline. Well, in this case, we are in a double top, and we're going to calculate it from the resistance area to the neckline, and in here we have a 60 pip range. So what we do is we go to the neckline and we extrapolate the 60 pips to the downside to get our targets. Okay, and now we wait for price action. Boom, as you can see here, when we break with the neckline, we have an entry to go short and to profit 60 pips from the breakout of these reversal patterns. And these reversal patterns occur very often, and if you're monitoring more than one asset or financial instrument, you might get at least 3 or 4 of these breakouts per day if you are day trading the 50-minute charts to the 1-hour charts. So if you are focusing your strategy solely on chart patterns breakouts, I can say that if you have discipline to wait for the breakout and to get out at the calculated targets, you will be trading a very profitable strategy.